Hi, everyone. I'm Kelsey, the CGO at Shardeum, and here I am today for the Lightning 3 with James, the CEO of DFG. Hey, James, can you give a quick intro, please?
Hello, everyone. Thank you, Kelsey. This is James, and the founder and the CEO of DFG. So I started this company back to 2015. So it's a investment firm in the crypto industry for about 9 years right now. So we've been supporting a lot of like decent founder and project in the industry. So right now we are self-funded. We manage over $1 billion right now. So we've been keep looking for good deals to invest and keep supporting the good founders in the crypto industry.
Awesome. Thanks, James. And anyone listening will see that this is our first episode of the Lightning 3 with friends, since James is an internal here at Shardium, of course. So we're excited to share some other voices outside of Shardium as well. And our first question that we have for you today is, what are the trends you are seeing in the current market from your investor perspective?
Yeah, great question. So for me, I'm into the crypto industry back to a decade ago. So I see really during the bull cycle and the bear cycle, I think the crypto industry become maturity stage, especially after the approval of Bitcoin ETF as well as the Ethereum ETF. I see a lot of great things happen in the market. So we will view like this is actually a good signal for crypto being more mainstream. So we see actually, just a couple of days ago, a couple of weeks ago, we see. I personally see a lot of actually my schoolmate and friend ask me about whether I should buy Bitcoin or whether I should buy more Bitcoin, right? So this is actually a pretty positive thing for me because we have really doing adoptions for cryptos through different ways. So this is actually one of the important things I see in the current market. It was just probably slightly different than the bull market in 2017 and 2021. It's more about crypto is going to mainstream. A lot more people actually owning crypto. This is good. The other thing I see, I think in the permanent market, it becomes super competitive. There's all kind of great, VCs in both Western and the Easterns actually providing
Mhm.
different values and providing also capitals to the great founder and project. So it's being extremely competitive in the permanent market. But I think there are still a lot of room to grow on the secondary market because individual investor and institutional can easily buying
Mhm.
Bitcoin through the ETF. But for the altcoin, there's still lack of access for the people to kind of invest, right? So this is actually one problem. And the other is on the institutional level, a lot of mainstream, capital, they are only allowed to buy Bitcoin ETF. They are not allocating their capital to altcoin. So I think on the secondary market, we will see more mainstream capital potentially invest not only just Bitcoin but also altcoins in the next few years. I think that's also a potential opportunity actually for investor to maybe catch the trend for the next few years.
Yeah, absolutely. And it's always a really good signal when your friends are suddenly asking you whether they should be buying again or what you're thinking about in terms of different investments. So that's really cool to hear. It's such a positive signal, I think, overall for the industry, along, of course, with the ETFs. So our second question for you today is, what are the top metrics you look at? What are you analyzing when you decide or are trying to decide whether or not to invest in a Web3 project? I know there's a lot of factors at play, but if you could give us some quick insight into what that looks like for you.
Yeah, I think the fundamental, things in for Web3 startup or for crypto project are actually two things. The first thing is always the founder and the team, because eventually we are relying on people to building stuff, right? So if we don't have a founder with good track record, or we don't have a founder with, knows exactly how to build things, or we don't have a strong team to build that, that's a red flag for us to make the investment. So always the founder and the team come first when we make the investment decision. The second is more about whether you can. I see a lot of example about founders aiming at very very big things, target very very big things, but there's lack of executions, in the reality, and you're trying to solve a really big problem, but the ability or the consistency for you to fix that problem is very, very weak. So this actually caused a lot of failure for the different Web3 project or the crypto startups. So this is actually also another thing we've been really take a close look at. You can, I mean, technically you can build a multiple project, but really whether you try to be more focused on and try to make sure all the project end up well is really a really important fact we evaluate things, because there are so many enormous founders trying to build a multiple project, and for one project you can cash out a few $1 million, then you move on to the others. That's not really the founders we like, and that's not the way we're building things. We invest the founders to building things. I think really important is really the consistency about you to focus on one things, or at least probably maybe you can do two three things, but you need to be very very focused and really make sure everything's work. So this is actually the second thing I think, which is probably very very important for us to make the investment decision.
Yeah, that makes a lot of sense, and that really resonates with us too. I think when we're working in tech, sometimes we can lose sight of the people. Like you're investing in people and teams, we're building things for people, and you don't want to just kind of invest in an idea by itself without really looking at the team. So that's really cool. Thanks for the insight there. And this next question and our last question overlaps a little bit, but we love to hear if you had to sum up DFG's investment strategy in the Web3 space, what would you say? Like, what's your kind of quick take on your investment strategy that you could share with us?
Yeah, sure. So we've been actually focused more infrastructure investment. Uh this is could be slightly different than the VC. I know a lot of VC are more diversified, but actually we're actually learning from the mistake we made in the last bull market, because we've been slightly too diversified in the last bull market. We invest into more than 100 projects. Actually, only 5 or 10, maybe five, between 5 or 10 of them are really, really good project and give us a lot of return. But a lot of project actually we don't do a lot of due diligence. We just make investment. A lot of them are applications we don't even know about what they are building. So allocating capital too quickly and in a too diverse way is actually a mistake we made in last bull market. So I think we keep learning from that, and we really pretty much focus on the infrastructure. I think. There's a few reasons for there are a few reasons for us to do that. The first is because I think there are still a lot of problem in the infrastructure which hasn't been solved in the industry, like scalability and other issues. So still a lot of potential and growth for the infrastructure in the ecosystem in the crypto industry. The second is more about, because I think the market cap about infrastructure is potentially much bigger than applications. If you take a look at top 100 on the CoinGecko, there's a lot of, most of them are actually infrastructure project. They're layer one, layer twos, or other infrastructure. There's few of application which you can probably, if you are entering the top three on the DeFi side, you're probably top 100. But other than that, I don't see a lot of application level business going to top 100. Maybe just simply because it take time to let things to be mature, and these kind of application can do potentially go top 100. But I just feel like at least at this stage, infrastructure have much bigger potential and kind of much bigger market cap as well than the application. This is the second reason. The third reason is simple, because we want to be focused. So on application, you can have, last bull market, you have different narrative like DeFi, GameFi, and NFT. For this bull market, you have AI stuff and your deeping stuff. I don't feel, on VC side, if you really being expert in a GameFi, you focus on the GameFi investment, that's fine. You maybe invest in top three GameFi project, which is great. But I don't feel like one VC or one investment firm can be expert to all the sectors. For example, you cannot be expert in both DeFi, GameFi, and AI. That's almost impossible. Even in the traditional Web 2 world, that's impossible. So instead of trying to invest in things that we are not familiar with. We're trying to probably invest in things we are more familiar with. We understand better, which is infrastructure. So that's the three reasons why we think in infrastructure fit into our investment scope. And for example, uh, also we also invest into Shardeum, right? I think Shardeum is a great example about why we invest into infrastructure. First, we have a great team, great founders, and also trying to really building stuff. This is great. And second, we have Shardeum doing really good adoptions in India, in other jurisdictions in Asia. This is also important for the growth of these kind of emerging market to getting a better understanding about what is a basically used for layer one we can use beyond Bitcoin and Ether, right? Beyond Bitcoin and Ethereum. So this is actually one of a great example why we need to invest into infrastructure, why we are good at doing stuff, good at doing investing to layer one. So this is actually our overall speaking, this is our focus.
Yeah, thanks, James. And we love hearing that Shardium is a great example of that. We feel so strongly about building that strong foundation layer for an infrastructure, of course, for all of Web3, so that all these interesting applications have the space to grow down the line, which is really exciting. And those were all three of the questions, James. Is there a place where folks should reach out to you if they want to get in touch? Is it Twitter, I guess X now, or LinkedIn or another channel that you prefer?
I mostly use Twitter and Telegram, so my ID is actually the same. It's at Real James Ward. You can always ping me on Telegram or leave me a message on Twitter. But otherwise, I mean, I know DFG also have their official Twitter account. You can leave a message to DFG, and I'm pretty sure my colleague will respond if you have anything you want to talk about investment in the crypto space, or even just like a more broad discussion about what is going on in the crypto space. I'm happy to talk to more people and learning from them.
Great. Thank you so much for joining us, James. Have a good one.
Yeah, thank you. Thank you, Kelsey. Thank you, everyone. Bye bye.
Bye.